Now we are on to our exercises. I'm going to work through some exercises with you, and hopefully these exercises will be helpful. Then when you go into Connect and work on the exercises, it will not be so difficult. Now, if you have questions about the exercises, if you have questions about PowerPoint 1, if you have questions about working in Connect, be sure and email me. Go into Canvas, access Canvas, again go to the inbox, and send me your questions, and I'll be in touch and I will help you as best I can. If there's ever a problem in getting your Connect work done because of communications with me, I will make it right. We will work together on it and we'll get through this semester together. Now, preparing the statement of stockholders' equity. If the company has only the retained earnings account changing during a time period, then it only has to show the statement of retained earnings. And so for this class, that's all we're going to really work on is this statement of retained earnings. Shows again profit, which is net income. Remember, net income is revenues minus expenses. And the payments to the holders of common stock are dividends. Company again does not have to pay dividends, that's why we don't call them expenses. And the basic formula for all this is beginning retained earnings plus net income. So retained earnings is going to go up by net income, it's going to go down by dividends, and then you end up with an ending retained earnings number. So this relates back to our learning objectives, and when we work through the exercises just should be reinforcing our learning objectives. So this problem, the next problem, is on it. This is from your textbook, by the way, but you don't need to look in the textbook. All the information are in the PowerPoint slides here. We have a corporation that was organized, so it started its operation on January 1st of 2014, and it's going for 2 years, and the information they're giving us is for that 2-year period. So when it starts out, the company has no retained earnings because it hasn't had net income, it hasn't had dividends. So beginning retained earnings when this company is organized in January 1st of 2014 is going to be 0. For each year it's going to go up by net income, it's going to go down by dividends, and then you're going to end up with an ending retained earnings. They're giving you what your retained earnings are at the end of each one of these years, but just by looking up here, we really don't need them to give us these ending numbers. They're check numbers, but we don't really need those to prepare our statement of retained earnings for this company, because we have beginning, which is 0, and we know it goes up by net income, it goes down by dividends, and these are the only two changes that are going to happen that are going to affect our balances. So why don't we just jump right into this thing here then? What we would do here then is again begin with 0. You add net income, you subtract dividends, and you come up with the ending retained earnings for this year. Now I want you to look at the top part of this that's in yellow. This is the header. This is called the header. If you notice that the first line is the name of the company, the second line tells us what statement this is, and the third line gives us a time frame for it. This is covering a year. It's covering a year of operations. So it says for the year ended. It gives the year end. If you know the year end, then you know it also must start at the beginning of that year, which would be January if it's 12 months, so January 1st. Taking this on, you see for the next year, if we did a separate statement for the next year, the beginning number which we start with for that next year is the ending number of the previous year. So December 31st, 2014 is also the number we're going to use for January 1st, 2015 for this next statement. In our header, the headers look the same between the two statements, the only difference being that the first one relates to the year ending December 31st, 2014, and the second one is year ended 2015, December 31st, 2015. So these are two statements of retained earnings for the company and how we just put the numbers into the form. A lot of accounting is that. Learning a form, learning the format, putting things in their proper places. The balance sheet lists things of value, which we call assets, things of value to others or things we'd rather forget about, liabilities, as well as equity, which is net assets, or retained earnings and common stock. So the next problem, you need to determine whether these items are assets, liabilities, or equity. Remember in our learning objective I said you'll have to classify as well. You'll have to take things and you'll have to figure out where they go. And the other thing about this is putting these together and then knowing that it follows the accounting equation, which is assets equal liabilities plus equity. And whenever this works, it's a true statement, and we will say you are in balance, and you should have things in balance. Again, this assets equal liabilities plus equity is also a representation of a statement. What is that statement? Right, the balance sheet. So here we have exercise 1-3. DSW is a designer shoe warehouse. I know DSW. It sells some of the most luxurious and fashionable shoes at prices that people can actually afford. Sounds like an advertisement, doesn't it? Balance sheet contained a number of items, and they are listed alphabetically, so they haven't put them into their categories. They haven't put the assets all together or liabilities or equity together. And what we have to do here is we have to go through and we have to figure out which ones of the elements each one of these items are. So we are classifying. I have a little hint over here to the left in blue, and it says liabilities can often be found by looking for the word payable. So one thing you should do is you should go through this and you should put an L or write something by each one of these that has the word payable, and note that these are our liabilities. I can see a few liabilities. Can you see the two that have the word payable by them? Now, we also have receivables, and receivables are things that are owed to us, so they have value because when people pay us, we are going to get that thing that is most valuable to us, and that is cash. So the receivable, I see one receivable up here, and I'm going to call it an asset. Having done this, then, we have taken care of the first two, and we've classified them as their elements. The accounts payable is a liability. Accounts receivable, we said, was an asset. Now we have cash, which is always an asset. Common stock is what? Equity. Equipment. Equipment is a thing of value. I'm not sure if I mentioned what inventory is. Inventory are the items we are going to be selling. So this of course has value to us because once we sell it, it will generate revenue, right? So we're going to call that an asset. Note payable, payable, liability. Retained earnings? Well, that's the equity. So the two equities up here are common stock and retained earnings. They give us a total asset number. Why do they do this to us? Well, it's because they want us to go back and they want us to use the accounting equation. So the first requirement of this problem is to prepare a balance sheet. Going back to our learning objectives, we are learning what the elements are, we are learning to classify things into it, and another thing which we're going to do is we're going to use our accounting equation, which is another learning objective. The last thing they ask of us is, did most of the financing of assets come from creditors or stockholders? So when we look at the balance sheet, we're going to see assets, and the other side to assets in the accounting equation is liabilities and equity. If it came from creditors, it shows up in liabilities, and if it comes from stockholders, we're going to see it in our equity section. So, whoa, that looks a little strange, doesn't it? But here we have the first part of it, my first click in the PowerPoints. We see at the top we have a header. Header is the name of the company, what the statement is, and the time period. For the balance sheet, it's a snapshot at a point in time, and here we have assets. Assets, we have all these items we just talked about, and we're going to check, and it should add up to their check total, which is whether they had told us were the total number of assets. There are liabilities, there are equity amounts, and if we add up our total assets, we find assets equals liabilities plus equity. Now, as for the financing, we find that these assets, which is about $1.2 million, most of that is coming from stockholders' equity, and most of that is coming from the investment from the common stockholders. You see the $841,600. Now $17,000 is coming from our operations. And $403,500 is the financing that's coming from our borrowing from others. So the equity has financed $858,600 total assets, and creditors have only financed $403,500. And notice again this format: assets equal liabilities plus equity. So we're in balance. Income statement shows revenues and expenses, and this next exercise is going to put this one together for us. So the first job you need to do in preparing this income statement, after you've done your header, of course, is going to be putting the revenue items in their place, the expense items in their place, and then just putting them all together into the statement. This is exercise 1-6. They operate movie and food concession counters in the U.S. They want you to put together an income statement. So it's easy for us to go through this and pick out revenue because that's the second item in each one of these captions, and expenses, again the second item. Put them all together and then figure out what total revenue is, total expenses, and what net income is. Put this below the proper header and you've got your income statement, which is requirement 1. The next question, though, on the balance sheet they ask us how we were financing our operations, and we had assets, and we were looking at liabilities and equity. This one, they want to ask us about revenue, and where our revenue coming from, and what are our major expenses. And the point in this problem is getting us to understand the value of financial reporting, the value of the financial statements. Got your header. Now there's the name of the company, what it is, and then the next one, it's for the quarter ended. So they're telling you it's not a year, it's a quarter. And this quarter is 1/4 of a year. It's going to end September 30th. The revenues you're putting in there off of that first form which we had. Expenses, you're classifying them, putting them down there, all in expenses. So a lot of accounting is just filling in the forms. You're going to total up all the expenses, get that total and put that total in there. And then you're going to subtract those two and get net income. This is the same net income number that shows on the statement of retained earnings. The next question they ask us is telling you about what's happening with the company. And the major sources of revenue, I'd say most of it is coming from admissions, but concessions is also contributing quite a bit to this movie theater. Now, the expenses. What are the major expenses? The major expenses appear to be film rentals and office expenses. The interesting thing about this is concessions are bringing in $308,000, and the expenses related to the concessions are only $39,000. So if you're talking about profitability and you're looking at profitability for this company, yeah, net income is $80,700, but remember we said up there that is in thousands, so we're really talking about 80 million or $80.7 million in net income. When we look at this in greater detail, we can see that really concessions is very profitable because revenues from concessions, $308 million. Concession expenses, which are the necessary payments that are going out for having concessions, is only $39 million. So, people probably wouldn't go to the movie theater and buy the concessions on their own. We need to be showing the movies. But in terms of bringing in money, concessions are quite profitable, right? So, the two sources of revenue up there, the two major expenses, which I think are what they ask, is for office expenses and film rental expenses. Well, now you have it. This chapter is almost over. The last part is filling in the blanks, and with this you're back to algebra. Balance sheet, it's assets equal liabilities plus equity. Income statement, revenues minus expenses is net income, which is also called earnings or profit. So the last problem we have here is fill in the blank. So revenues minus expenses is net income. So to get A, these are independent cases, by the way. They're not related to each other. So you just do one line, go to the next line. In A, simple, 110,000 minus 82,000 is net income. Assets minus liabilities is equity. 150 minus 70 is right. So you can fill in these blanks. And here again are equations at the top. And go through, fill in the blanks, and see that you know how to do these. On exam, I would not give you this and say revenues minus expenses is net income. I would give you something like this, and I would say give it to you, and you'd have to figure out what the numbers are and what numbers you should put in there. So this is the last exercise we worked together. Now what you need to do is go into Connect. Alright, and here's the information you need. It's Accounting 201. My instructor name is there. It's summer 2016. This is an online registration information. Here is your web address you go to. And if you have trouble, this is what you need to go to. Now they're going to ask you to register. When you register, they're going to ask you for your code. The code is the code that you purchased from McGraw-Hill. So you need to have it readily available when you go to the website, and you need to register. This is something you need to do and you need to get done. So this will be due the next day. So this is Monday. So this would be due by Tuesday, tomorrow noon. And you'll go through the Connect exercises. These exercises are for points in the class, so I can't stress enough how important it is that you work through them. If you have questions again, go ahead and email me and I'm happy to help you. Okay, bye for now.